Hi, I'm Jimmy. In this video, we're looking at Bristol Myers Squibb, ticker symbol BMY. So we're going to look quickly at Bristol Myers business, and then we're going to try to see if Bristol Myers is worth buying today using discounted free cash flow. Okay, so let's jump right in. So Bristol Myers is a global biopharmaceutical company, and basically this means that they research and develop medications. And one of the keys to running a successful biopharmaceutical company is that they have a steady stream of new drugs in their pipeline. So this is some of Bristol Myers' largest revenue generators coming out of their 2020 annual report. So they make medications for cancer, leukemia, although leukemia is a type of cancer, but still they have drugs for rheumatoid arthritis, stroke prevention, and this is the vast majority of the revenue. This generates about 86% of revenue, at least it did in 2020. Now, one of the keys for any drug company is how long they can make money on the drugs that they create. And generally, to help lock in their profits, well, the most drugs end up with some sort of patent protection for at least a few years after that drug becomes available to the public. And it's important for us as potential investors to have an idea, at least of when the major drugs are going to go off patent. Because basically, this will trigger a drop, usually a gradual drop in the revenue and ultimately the profit from that drug. So what we could scrape up on these major drugs is about these expiration dates. So the leukemia and rheumatoid arthritis medications have either recently gone off patent or will go off patent soon. And the revenue for these medications are expected to gradually decline over the next few years. Then both Revlimid and Pomalyst, I'm not sure if I'm pronouncing those correctly, but those two drugs came out of the recent acquisition with Celgene. We'll come back to this one in a second. And clearly, these are big contributors to their overall revenue. That being said, when we jump over to revenue, well, we can see this is revenue going back to 2006. And things really ramped up in 2020 for revenue. And again, this happened because at the end of 2019, Bristol Myers Squibb acquired Celgene, another biopharmaceutical company. And clearly this provided a really nice pop to their overall revenue. And it seems that this was one of the primary reasons for the acquisition. I saw interviews with the CEO where they were talking about this would give access to different drugs like Revlimid, which have patent protection going out for at least a few more years. Plus, Celgene had a handful of interesting drugs that looked like they could do very well in their pipeline looking to get approval. So it's expected that the Celgene acquisition should provide a decent amount of free cash flow and revenue for the company going out the next few years. Now, we need to recognize that revenue wasn't the only number to jump. We also see big jumps in free cash flow, particularly around expectations for free cash flow going on the next few years. By the way, free cash flow estimates here are analyst estimates. This is a yellow-orangish color. Okay, so both free cash flow and revenue saw jumps or will see jumps in the near future. But so did debt. And this is not only because Bristol Myers took out debt to acquire Celgene, but BMY also had to take over Celgene's debt, whatever debt that they already had on the books. So we can see that there was a huge jump in debt going into 2019. So we might also notice or be aware of the fact that the debt jumped in 2019, yet we saw free cash flow and revenue estimates or revenue numbers jump up in 2020. And just so we're on the same page, the reason that we would see a jump in debt before we would see a jump in free cash flow and revenue, it's because of how the balance sheet works. So the balance sheet has debt and liabilities, cash, assets, things like that. But it happens at a specific point in time. For Bristol Myers, that is December 31st, in this case, of 2019. That was the date of the balance sheet. And since they completed the acquisition for Celgene on November 21st of 2019, well, about a month later, 6 weeks later, whatever it was, well, the balance sheet date comes to an end. And by that point, all of the entire balance sheet from Celgene was moved over. Plus, Bristol Myers had to take out some debt to make the acquisition. But the key point for us to remember is that this is at a specific point in time. The cash flow statement and the income statement, on the other hand, well, they're not snapshots at a specific day, they're of a specific day. They look at a time period. So how much revenue was generated over an entire time period? How much free cash flow was generated over an entire time period? And again, because the acquisition happened in November, well, that barely affected their 2019 numbers. In 2020, though, they had a full year of revenue and free cash flow generation. That is why the timing looks a little bit off. Okay, I just wanted to clarify that real quick. Now, one other quick clarification that I think is worth noting, just in case you've done some research on BMY already, well, if you look at BMY's stock, if you were analyzing BMY's stock on most financial sites, well, you might have looked at their net income, and their net income numbers would look something like this. This is their net income according to the rules of US GAAP. And in 2020, well, we see a big loss of about $9 billion in profit. So they have negative $9 billion for profit. So clearly this is a giant red flag. But when we look a little bit closer, we read through their annual report, well, we might notice this is a snapshot of their annual report, and we might notice this IPRD charge. IPRD is short for in-process R&D, or R&D is short for research and development. So in-process research and development. And they clarify that this was from the MyoKardia acquisition in 2020. Well, that is because that acquisition was classified as an acquisition of an asset, which is different than the more common business combination acquisitions. So when they acquired Celgene, that's a business combination. They counted this as an asset acquisition. One of the accounting rules of an asset acquisition is that any in-process research and development gets expensed immediately. So they take about $11 billion hit, driving the profit that they had for that year negative. Now, this wasn't the only write-off. There were a few others, but ultimately, when we adjust the numbers for these one-time charges, because that's the key here, that's not going to show up next year unless they do a different acquisition. But for these acquisitions, that was a one-time charge. So when we adjust each of the year's profits, excluding one-time benefits or one-time charges, well, this is what the new revenue chart really looks like. And we can see that, at least partially thanks to the acquisitions that BMY has completed in recent time. Well, it looks like profit are expected to ramp up over the next couple of years. That being said, let's now shift over to our fair value calculation for BMY stock using discounted free cash flow. So when we look at our discounted free cash flow calculation, well, we take analyst estimates going out the next few years for free cash flow, discount them back to today. We used a required rate of return of 7.5%. And this gives us a fair value for the entire company of about $159 per share. Now, we know that they added a whole ton of debt, so we're going to want to account for that debt. So basically, we take net debt, which is debt minus cash. When we make that the adjustment, we offset those two numbers, take that away from the company value. Well, we ended up with a new debt-adjusted fair value for the stock of about $146 per share. Right now, BMY stock is trading closer to just $57 per share, so it seems that the BMY stock could be way undervalued. So, should we buy BMY stock today? Well, of course, the answer is it depends on our own investment portfolios. But over on our private investing community, we're doing these weekly live streams where we're building different investment portfolios. We have a defensive portfolio, we have a growth portfolio, we have a dividend portfolio, we have somebody with a limited amount of cash, somebody based out of Europe, somebody who likes to go big or go home. And I think that this stock certainly belongs in some of the portfolios. One portfolio that makes a lot of sense is our dividend investor. We've set up a mock portfolio for retiree. It might make sense in their portfolio. So right now, BMY has a dividend yield of about 3.5%. So this fits, I think, to their portfolio. When we look at some of the other holdings that they have, this would be a nice diversifier to what we already have in that portfolio. And it could add a little bit of growth potential with a decent dividend yield in the meantime. So overall, BMY looks like a very good stock and could fit in a lot of portfolios. Now, if you're curious about building investment portfolios, or if you want to see some more deep dives on companies, or learn the process that we use to research a stock like BMY, well, I'll leave a link in the description below to join our private investing community. We have a Patreon link below, which is ultimately the gateway to get into the investing community. Now, we do all of that stuff on our weekly live streams. We do 3 private live streams per week. And that's actually where this video idea came from. We did a live stream where we were walking through how to compare competitors of an industry. And we decided to look at the biopharmaceutical industry. We looked at BMY and a few other companies. So again, if you want to meet up with us over on that channel, I'll leave a link in the description below and a link right here to join that community. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.